Hey everybody, I hope you guys had a good holiday. I've been enjoying a week off, but while I've been away, we've just had some really crazy moves here. So I'll just show you here on the chart really quickly here. This was the day before Christmas, and we just had an absolute disaster of a day. And then the day after Christmas, it reversed, and we had a really big up day. I think they said that that was the largest point gain ever. And then yesterday we had a pretty good down day until at the very end of the day, and we had this huge, and I mean, this was a really just an absolutely crazy rally at the end of the day, moving us up. So I've been reading on social media, and I'm seeing a lot of comments like people seem to be confused. Why is the market doing this? I'm seeing a lot of accusations about maybe the market is being manipulated, like what's going on. And so I wanted to make a video geared more towards a general audience, people that aren't scalping with us every day, to explain the market conditions that are leading to this action. And the key point that I want to make and stress to you is that market liquidity is low right now. Well, what do I mean by that? Well, right now, here on my screen, I have some depth of markets on here. So like this one right here, this is the 5-year treasury, right? Here is the 10-year treasury, 30-year treasury, and then S&P 500 futures contracts, all right? And these are depth of markets, and what you see in the depth of market is that each price shows us how many contracts are being bid or offered at that price. So if you look over here at the 10-year, that's the one that I trade the most. For instance, at 121.13, I'll highlight it here, there's 940 contracts bid. All right. There are 2,254 contracts offered. That means there's 2,000 people that have limit orders to sell at that price. So in order for price to move down, there would need to be, 700, 900 contracts would need to sell at that price. And then we would need a few contracts to then offer at that price in order for us to move down, right? The more contracts that are bid or offered at any price, the harder it is for price to move. And that's really, really important, because normally there's going to be like 4,000, 5,000 contracts bid or offered at every price. And what are we seeing right now? 2, 3, like the biggest number that we have right now is the 39.43 at 14. So this is a lot less liquidity than we normally have. And that means that if somebody comes in and they want to buy a huge number of contracts, they're going to move the market more than they normally would. And that's why we're seeing the big moves that we're seeing this week. So in the E-mini, if I'm a large fund, and I need to rebalance my portfolio for the end of the year, and I have to buy some equities to do that, well, I'm going to move the market big time. And then what happens is everybody kind of sees that momentum, and they all try and jump on the trend, and it kind of just makes the move even stronger. So my recommendation is to not read too much into the action that we're seeing right now. I'm really encouraged by the action that we've seen the past 2 days. I think it was kind of funny. I made that video earlier in the week where I said, like there's a lot of panic right now, and, wouldn't surprise me if we had some kind of a turnaround, but we don't really know. Well, I'm really encouraged by the past 2 days, but it's kind of a surprise that it's been that strong, and we can't read too much into it, because there's a chance that we're going to have another day that's a big down day that's just going to completely wipe it out. And you got to keep in mind that there's no real reason for the liquidity providers to be involved between about the December FOMC meeting and the first non-farms payroll number of the year, because we're just not getting new economic data. Our knowledge of the state of the economy isn't really changing. So it doesn't mean that these days don't matter, but we don't want to read too much into them, because we need to keep in mind that the degree of the move isn't happening because something really important happened, or we learned a lot about the market, or it was important. It happened because there was low liquidity, and so we have to factor that into our analysis. So yeah, that's the main point that I wanted to make. I know this is a complicated subject, so if you have any questions, please put them in the comments, and I also have other videos that you can look at that may explain things better. But yeah, please leave comments if you have questions. I'll try and answer them, and I hope to see you guys next week.